Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, October 21st, 2020, and I'm pre-recording this Trading Places Live for Thursday, October 22nd. Futures are lower in after hours action after a pretty weak finish on Wednesday, and I'll go through all of that in just a moment. Getting into the agenda for today, I'll go through your daily market recap. Then we'll get into talking technically. Earnings theme, got an earnings theme I want to go through, talk about a little bit how I approach that at Earnings Beats. Chart lists, we want to continue to look at those chart lists, see some of the better performing stocks, worst performing stocks in those various chart lists that we keep. Earnings spotlight, so there were some companies reporting after the bell on Wednesday. I'll go through those with you. And then we'll wrap up with the three you must see. Before we get into any of that, I do want to direct your attention over to earningsbeats.com, where if you're not already a member in our community, you can sign up for our free Earnings Beats Digest. It's published Mondays, Wednesdays, and Fridays. Simply type in your name, email address, hit the subscribe button, and we will make sure we get you set up there. If you'd like to become a member at Earnings Beats, simply click on this Join Today button, and you'll find all the things that we have to offer at Earnings Beats. I think you'll find a lot of things that are quite valuable in your investing and trading. You can see here on our homepage the various portfolios and how they've been performing relative to the S&P 500. The results, I think, speak for themselves. All right, let's go ahead and jump into the action. We got a lot to talk about in this program, so I want to go ahead and jump in. Dow Jones Industrial Average down almost 100 points. The S&P down 8. NASDAQ was down 32. Mid caps down 14. Small caps down 4. So as you look across the board, everything was down, but less than 1%. But there was some selling at the end of the day. And in that final hour, we saw the Dow move into negative territory, really across the board. A lot of selling in that final hour. If we look and break it down into the sectors and industry groups, communication services had a really strong day on Wednesday, gaining almost 1.7%. And Staples, that was the only other group that was in positive territory. So communication services up 1.7%, really took on a leadership role. Staples up just a little bit less than 0.1%. And then on the flip side, as we've seen throughout many of the last several months, energy lagging, and that has just not been anything new. Energy continues to be really the bottom of the heap and a group that I would try to avoid as much as possible. As far as the industry groups go, within communication services, media agencies jumped more than 5.25%, a big breakout, heavy volume, really nice action in the media agencies group. On the flip side, though, marine transportation stocks, once they got up to that 50-day moving average, and you can see the same thing happened back in August, got up to the 50-day and then turned back quickly. Seems like what we did here. Not only did we fall well below the 50, but we also lost that 20-day moving average. And we had a similar setup here like we saw back in August, where that 20-day was starting to turn up. Looked like maybe we were, the worst was behind us, and then suddenly we fell, went below the 20, and then just kept trending lower. Don't know if this is going to do the same thing, but it certainly doesn't look very good based on the action on Wednesday. All right, 10-year Treasury yield. Kind of odd. The good news is we saw the 10-year Treasury yield break above 0.8%. We had not seen that since back in June. We got up and tested that level earlier in October. Well, we made that breakout on Wednesday, so that was a really good thing. Unfortunately, when we move on now to talking technically, I want to continue this discussion about the 10-year Treasury yield, but I want to do it in the context of how banks and financials are performing. Normally, what we see is when the 10-year Treasury yield starts rising, we normally see banks outperform the S&P 500. We definitely saw that back in late May, early June. You can see we started moving above the moving averages, then had that spike at the end of the first week of June, really big move. And look at what the banks did relative to the S&P 500. Look at what financials did relative to the S&P 500. So that big spike in the 10-year Treasury yield resulted in some really good action in the financial space. But if you notice, look at the last 4 highs here on the 10-year Treasury yield. Here, the second week of August, end of August, early October, and now again here on Wednesday. 4 highs here, 1, 2, 3, 4. Look at banks relative to the S&P 500. Lower, 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 and lower. Same thing happens with financials, the XLF. Lower, 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 and lower. So we keep moving down on a relative basis. So you've got to wonder if the 10-year Treasury yield is going up and we still can't get relative strength out of financials and especially out of the banks, what's it going to take? And that's why you still have to be very cautious with these two groups. And if you're wondering, I've also included correlation here. Correlation is generally positive between the direction of the 10-year Treasury yield and the direction of the relative strength of banks. That's what all these readings in positive territory mean. And yet we're just not seeing that. Same thing with the financials. When we look at the correlation over the last year, mostly in positive territory, many times up near +1, which is as high as you can get, showing that there's a tremendous positive correlation. We don't get anywhere close to -1. In fact, anything down around that -0.5 level is kind of an extreme in terms of inverse correlation. We don't normally see that. So just something to keep in mind. We've got the 10-year Treasury yield moving up. Normally that should mean financials outperform. Normally it means banks outperform. And we're just not seeing that yet. Something to watch as we go throughout this earnings season. One other thing I want to mention here in talking technically, the S&P 500. Now, price-wise, when we had the big drop back in September, we had the gap down here on September 8th. Look at this reaction high, 34.25. See that level right there coming across? Moved back down to a new low, bounced, failure at 34.25. Went back down to 2 more lows. Then on this rally, failed at 34.25. Went back down and then finally broke out in the second week of October. Broke out above 34.25. Look at this green arrow. We come down, we test 34.25, we hold, and we go higher. We come back down just earlier this week, test 34.25. We hold, we bounce. Well, we're working our way back down. We closed at 34.35, and futures are pointing right now to a possible break of that 34.25 level tomorrow morning at the open. We need to pay attention to that. One of the reasons why I've shown on this chart here the annualized returns for each trading day from October 22nd through the 27th, dating back to 1950. So this is every October 22nd, looking at the information on the results of trading that particular day since 1950. Minus 96.42% is the annualized return. 23rd, minus 7%. 24th, minus 39%. 25th, minus 49%. 26th, minus 47%. 27th, minus 18%. These 6 days are the worst 6 consecutive days historically for the S&P 500 since 1950. That starts on Thursday. Now, do we go down every year from the 22nd to the 27th? No. Be careful. I'm not saying that the 22nd we're going to see a 96% drop. This is an annualized return. So probably the averages are, maybe it's averaged a little over a 1% drop on the 22nd in order to have annualized returns all the way up there at 96. But still, the point is that this is a fairly bearish week historically. Now, since year 2000, this week has gone up 11 times. It's gone down 9. So it's not a slam dunk. I'm not trying to say that, hey, we're in for this big problem, but it's worth noting historically, this is a rough period coming up. And technically, we've got to watch because we could get a breakdown. All of this weakness that we saw in September occurred with that hourly PPO, for the most part, below the center line. And if you look, that's where we are right now. Now, I don't know if we're going to see the selling accelerate like we did in September. I kind of doubt that we will, but I'm not going to rule it out. I think it's possible that we continue moving down. Watch this channel that we seem to be in. If we can get back up above, say, 34.75, I think that would start painting a little bit more bullish picture. But if we stay in this channel and move down, break down below 34.25 on Thursday, then I think we got to be a little bit more careful. All right, one last thing in talking technically, and that is copper prices. Historically, this is the last 20 years. Here is a correlation of copper versus the S&P 500. And as you can see, most of the time we spend in positive correlation, meaning that whatever copper's doing, we tend to see the S&P 500 doing the same thing. If one's going up, the other tends to go up. When you look back at the last 20 years and you see the times that copper has moved higher, 2003 to 2006, 2007, that entire period was a bull market for the S&P 500. 2009, remember we bottomed in March of 2009 on the S&P, and those next couple years we had a big rally in the S&P 500. Well, we also had a big rally in copper. End of 2016, the last election, through the entire 2017 into early 2018, it was one of the best periods in the stock market. If you recall, it was the longest period in history without the S&P 500 having at least a 3% pullback. That occurred with copper prices rising. Now, I mention all this because we have a double bottom in play here with copper. The high in between this double bottom is 332. We got up to 320 where we closed at 320 today. A move through 332 would be incredibly bullish, not just for copper, but it would add to the bullishness in the S&P 500. So keep that in mind. All right, let's move on to earnings theme. And really what I'm, I saw Snap come out with its earnings report, and I mean, they absolutely just blew the numbers out of the water. A really, really strong report. You can see the market reacting, loved what it saw. Snap was up 28% on Wednesday. Huge move. Look at the volume. You just can't mistake volume. When you see volume like this, which just absolutely just crushes the volume that we saw throughout the rest of the year. I mean, it's been odd to even get a 50 million share day. We had over 250 million shares trade on Snap, and the stock was up 28%. That's telling us that investors, institutions were literally tripping over each other trying to buy shares today. That not only bodes well for Snap, but it also bodes well for other internet stocks. So for our Earnings Beats members, one thing to keep in mind is to make sure you go in and check out our chart lists for internet companies. If you look at our strong future earnings chart list, Snap was on it. We already, based on technicals, Snap was a stock that we were expecting might see some pretty good numbers coming out. Stock up 28%. It was the best performer on this list. But look at what was right behind it. We've got Pinterest and Twitter, two very prominent internet companies. Pinterest is in our model portfolio. We love the company. It rose 9% on Wednesday in sympathy with Snap. I think Pinterest is one of the best internet stocks out there, along now with Snap with that huge move. But those are two of the best stocks out there. But as you look at some of the better performers in our strong future earnings, you got Snap, Pinterest, Twitter. Come down here, you got Cardlytics, another internet company, Spotify, another internet company. So 5 of the top 11 companies on our strong future earnings chart list were those internet companies. And when you start seeing a theme like that, that's why so many other investors, institutions started piling into these other companies, because they see what Snap did. And after seeing what Snap did, now the market is going to begin raising the bar, its expectations on other areas in this internet space. So you want to watch these areas as well. And you can go through any of our chart lists. I already ran this to see if there were any internet stocks on our short squeeze chart list. There are not, but you could pull up raised guidance. And by the way, when you're looking at this, you don't have to just scroll through in summary form. You can either search by using the industry, or what you can do is just, I always do it in scooter order and then type in internet. And there you have, now that's in order of the internet stocks that are on the raised guidance chart list. UPWK, this is Upwork. Stock pulled back, it was down 4%, so it didn't really participate, but this thing's been on fire. Went from 15 to 21. That's a 40% move in a month, less than a month, probably in about 3.5, 4 weeks. So pullback certainly is justified. Watch that rising 20-day moving average. I wouldn't be surprised to see buyers stepping right back up there if we can get it down to the 20-day, something to watch for. But my point here is you can take a theme like this once the market starts to grasp that, hey, internet stocks may be a place to look at. Take our chart list that we do and that you're able to download into your account. If you're a StockCharts member as well, you can take our chart lists and download them right into your StockCharts account. You got to be at least an extra or pro member. But if you are, all of our work, I can spend hundreds of hours putting together a chart list, and you can download it into your account in about 3 seconds. So make sure, if you haven't already given our service a try, make sure you give it a try. There's a lot of great research that we do that you can put right into your account at StockCharts. All right, let's take a look at the chart lists. Talked a little bit about the chart lists. So let's take a look first at the best performing stock in our strong earnings chart list. The best performer today was Frisia, PHR. And when I pulled this chart up, first of all, look at that volume, very heavy volume going back to last year, second heaviest day of within the last 52 weeks. And it accompanied a breakout above $34. You can see multiple tests at 34, couldn't get through. Today we open at 34.44. I always like it when you get an open above resistance. And especially if you get an open above resistance, you get a tail to the downside where it looks like it's reversing and then comes back late in the day and finishes strong. That's a nice looking candle on this breakout. So PHR is certainly one that I expect we'll see higher prices down the road. Worst performer on the strong earnings chart list. It's unbelievable. I don't know how many days in a row Jinko Solar printed a higher low, but that ended very violently on Wednesday with the stock down 22%. Look at the volume. We were at a new high. We were up over 90. I talked about this on one of my Trading Places live shows when the earnings came out and it went through 29 and it took out that high. I wish I had bought it that day and just held it. The stock, ever since this low was put in back on September 8th, it put in higher intraday lows every single day until Wednesday. I've lost track how many straight days this was, but it's probably 30 or in the 30s. I am pretty certain I've never seen that in the stock market before. A company going up, putting in a higher low for 30 days in a row. I'm certain I haven't seen that before. But Jinko Solar did reverse. I suspect we probably just put in a pretty significant top. There's a reason why it's been accumulated. Part of it is short squeeze, but there's probably more behind it than just that. But I would be expecting at least a sell-off down to the 20, maybe even intraday below the 20 to scare a lot of folks out. Anybody who bought this stock at 90, if we go back down in a day or two and hit under 60, you can bet there's going to be some panic taking place. So I think there's going to be an opportunity. Market makers probably going to be doing a lot of whipsaw action and driving folks emotionally crazy with this stock over the next few days, I'm sure. I'm going to pull up in our strong accumulation distribution chart list, one of the best looking stocks or one of the best performers, or I should say the best performer today was Calix Networks. Look at the volume, highest in 52 weeks, sideways consolidation. We got that breakout. AD line has been very strong. I think the stock looks great. Look at it relative to computer services, breaking out to a new 52-week high. So this is a really nice performer as well. Maybe we get a gap fill. If we do, I think this would be a great entry for the stock. Worst performer in our strong AD chart list was EXPI. And this one, after breaking out, you can see the double top right around 46, 47 bucks. Seems like that's where we're headed. So I'd look for a reversing candle on this stock. This has been a really good performer, but it was just over 62, overbought, and now you got market makers bringing it back down. But if we were to get like a reversing candle, a hammer, something like that to print on that 50-day moving average, that would be something that I'd be interested in. All right, earnings spotlight. I want to keep moving because I got a number of these earnings reports that I wanted to go over. We had a webinar 2 days ago, actually just 1 day ago with our members. It was Tuesday evening. And I laid out over the next seven calendar days So starting today, Wednesday, the 21st, through next Wednesday, the 28th, I laid out 115 companies. 70 of those companies, I believed, have a good chance of reporting strong results based on the way they're trading. Just looking at the charts, I believe Wall Street is expecting good numbers. 45 charts on that list, I think just the opposite. They've been underperforming. Wall Street is casting them to the side. I would not be expecting much from those companies. We put these 115 charts into a chart list. And actually, at our website, when you go in, once you sign up, if you're even if you're just a trial member, you'll come in. And this is kind of how you look at our site. And if you go under members and click on chart lists, it'll bring this page up. And if you scroll down toward the bottom, there's webinar chart lists. This is the Q3 earnings chart list we just had last night, Tuesday evening. And what you need to do is, if you're a member, you can copy this password and then click on this link. Now, I may have already downloaded. I doubt that it's going to ask me for a password, but if you've not been in and gotten this chart list before, it's going to ask you for a password. But essentially what you do is you click on the link, and yeah, I did ask it for it. So then you type in the password. In this case, I just paste it, unblock. Uh-oh, that one didn't work. I'm not sure why that didn't work. I'll have to go back and check. Maybe I copied more than what was supposed to be copied there. But anyway, that should be right. Anyhow, I think I know our members have gotten this, and we haven't had any email, so I must have copied it wrong or something. But anyway, what that does is it brings you up those 115 charts that you can then look at. And I've got them labeled as to which ones I think will be strong. They start numbered, they're numbered 001 to 070. And then the ones that I think are going to be weak are labeled 501, I think, to like 545 or 555, something like that. Anyway, the reason I mention all of this is there were a number of companies that reported after the bell tonight. And I have on this list the stocks that I thought would be strong. One of the stocks that I said looked really strong to me was Align Technology. And when you look at this chart, I want you to see a few things. First of all, medical supplies relative to the S&P 500 near a 52-week high. Align relative to the S&P 500 near a 52-week high. Align relative to medical supplies near a 52-week high. Medical supplies on an absolute basis near a 52-week high. The AD line, accumulation distribution, near a 52-week high. Everything points to Wall Street expecting big numbers here. After the bell, Align Technology came out with revenues of $734 million. Market was expecting 551. 734 was the actual number. 551 was the estimate. Absolutely crushed the revenue estimate. Bottom line, $2.25. Market expecting 73 cents. Beat it by more than $1.50. Stock's up 25% after hours. 25%. So I think it was up 80 or 85 bucks. I don't remember exactly how many dollars, but 25.54% was the last thing I saw. Pretty good information that was on this chart before we ever went into the earnings. So just wanted to point that out. Now, some others. CMG was actually the worst performer in after hours of the good stocks that I had given out. But they beat on their top line barely, easily beat their bottom line, 376 versus 344. But the stock was down a little bit. Now, we have a nice little cup here. I think we might pull back into a handle. But I expect CMG is going to go higher in time. GGG was pretty flat. This is Graco. They were flat after hours, beat top line, beat bottom line. Then there was MTH, Meritage Homes, beat top line, beat bottom line, flat after hours. Tesla, beat top line, beat bottom line, stocks up over 3% after hours. Whirlpool, beat top line, beat bottom line, up almost 5% after hours. Xilinx, beat top line, beat bottom line, up 2% after hours. every stock that I gave for tonight that I thought was bullish beat on the top line, beat on the bottom line. Every one of them beat estimates. I think that's pretty important to have that information. And again, you can download the next 7 days worth of this simply by going into our website to that webinar, Q3 earnings webinar chart list, and just downloading it into your account. Now, I gave two that I didn't like, and both of these are relatively flat after the bell. One was Core Labs. I mean, just look at the price action. Look at the AD line going down. Look at the relative strength, all pointing lower as opposed to the one I showed you on a line. All the other positives look pretty bullish, lines going up. This one looking down. How about Kinder Morgan, KMI? You know, I mean, this is in the energy space. There's a reason why energy is underperforming. AD line, 52-week low. Price has been declining since that June spike. Relative strength. You know, pipelines, absolute basis going lower. Look at all these relative strength lines down near 52-week lows. Stay away from those stocks. Those are stocks Wall Street wants no part of. We shouldn't want any part of them either. Anyway, again, go into Earnings Beats if you want to get that list. Join today. Get that account set up. It's a 30-day trial, $7, but we'll refund you the $7. So for 30 days, you can try us for free. The other thing is, by signing up now, your 30-day trial takes you past November 19th, which is when we'll have our next 10 stocks announced for each of our portfolios. That'll be included in part of your free trial. But then just go in, make sure you go to the webinar chart list, click on this link, enter that password, and you should be good to go. Last thing I want to do, 3 you must see. I'm going to go through this kind of quickly. I thought what I'd do is look at the 3 worst performers in the Dow on Wednesday and just take a look at their charts, look at their relative strength, and just see what we think. So you got Boeing, IBM, and Goldman Sachs. Let's start with Boeing. So first of all, without even looking at relative strength, look at the AD line on Boeing, 52-week low. I think continue to see distribution. I think it's too early to be going after Boeing. When Boeing starts to show relative strength, we'll be interested. Right now, look at the relative strength. See these lines? I mean, do you see anything going up? I see nothing. There's just no reason. Aerospace is a bad area of the market, and Boeing is a bad performer within that space. Stay away. Next up is IBM. You know, what was interesting is, first of all, there was a false breakout above the June high. Shooting star. That is not good. It's like a shooting star, almost a shooting star doji. But here you can see that shooting star since then. Look at all the selling. Look at the relative strength. That little spike, that's what it did. IBM, relative to its peers, has been in a downtrend for probably about 8 months. IBM relative to the S&P in a downtrend, sitting at a 52-week low. Everything about this chart looks bad. Don't make excuses for IBM. Stay away. And then last one is Goldman Sachs. Goldman Sachs has been going sideways. Also can't get above those summer highs. And on a relative basis, this looks a little bit better than the other ones, but still not very good. Look at it relative to the S&P 500. If you're trying to beat the S&P 500, it's going to be hard to do it with Goldman Sachs. Anyway, that's it. Thanks for tuning in today. I'll be back next week for the next episode of Trading Places Live. It'll be over at Earnings Beats on Monday morning at 9 a.m. Eastern. I want to wish everybody a happy weekend. Hopefully the market treats you well these next couple of days, and be sure to sign up over at earningsbeats.com. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.